Hello, today is Friday. It is 3:19 p.m. Eastern time, so not at the close yet. Want to give you our mindset, what we're thinking into the close, thinking about next week as well. Just kind of give you our mindset. This is specifically for clients. If you're not a client, that's completely fine. Maybe you'll learn a thing or two. That's great. So in short, let's start with the indexes and we'll go from there. So right off the bat, intraday, you're noticing that it's not a pretty day. And yesterday was not either. It was pretty ugly. Breadth, interestingly enough, was not bad yesterday despite an ugly day. So this is yesterday, okay? So breadth was actually better yesterday despite a 2% down day, and the NASDAQ was better yesterday than it was Wednesday, which the NASDAQ was up. In short, we were getting a lot of one-sided movement to a lot of the tech names, which is not uncommon, just needs a little breather. So take a little break. I would not freak out yet. Key levels are holding. We did add some yesterday, about 35%, because we only had 10% invested. So some clients are 35% invested, some are 45% invested. I add at natural, levels that many would consider adding, and I'm okay if it does go lower because I have so much to add. So I basically said, listen, I know I'm not going to time this perfectly, but I do want to add. I added on yesterday's close. Obviously, we're not positive right now, but let's look at the 1 week, and I'm going to show you, guys, this is not a bad week. Okay, so here is the weekly perspective. And if you're new to watching these videos, we actually do not trade the indexes rarely. We do sometimes. We actually do have some index trading that we added yesterday just to get a position on quickly. Most cases is all individual names, okay? So that you gotta have to understand that this is a macro perspective that we delve down to get more individual based in sectors. So just wanted to make sure that that was clear. So the 1 week, the Russell, again, what you're noticing here is a rotation. Even in the indexes, the leader, the NASDAQ, taking a breather. The beaten down names like the Russell 2000 actually outperforming. So that's not a bad thing. The title of our session is essentially sector rotations are healthy. Can leaders establish bases? The key in my mind is, can the leaders establish a base? That is important. In short, I don't think that this can continue for long. Okay? So again, intraday, not a pretty day, but has really been a horrible week. Not really. We're at key levels in the NASDAQ, and that's really what I'm paying attention to closely. Now let's update this. Sectors intraday. It's also a sector rotation. So this is not uncommon. Getting a breather in the tech names, the leaders, and a lot of the beaten down name areas, staples, real estate, financials, communication services. That's actually been kind of a leader. But in general, we are seeing a rotation. So let's look at the week. And that kind of follows the same story, to be honest with you. A rotation out of some of the leaders and just some of the beaten down areas. I think we need to see some rotation back into these names, or the market will struggle. Could be wrong, but typically, if that doesn't happen relatively fast, it's not a pretty picture. So it's something we're definitely watching, but very even keeled. We did add a little of some yesterday at key levels, and we'll show you those levels. So going to go to the next chart. It's going to go pretty fast here because we basically show similar charts. Just want to make sure you're understanding where we stand at this point. Trying to make this a little bigger. There we go. Okay. So the S&P 500, this is the chart that we've been showing almost every session we have. Ultimately, we believe that it could be that we have a session, or a summer session, the next few months in between the 2950 and the 3233 level. That's the red level. It would not surprise me, nor I think anyone, if we kind of test in here for a little bit to digest some gains. Now, the yellow area is basically where we digested some gains last summer. Now, is this the common theme that most people think that it won't happen? It very could be. There are still a lot of people that are extremely bearish, but also active managers had 90% this week invested, which is actually not bullish. So you have some conflicting breadth measures or sentiment measures. What we would like to see is if we do test this, the relative strength index stay near and above 50. That has been good of uptrends. That's traditionally a good thing in bull markets. I do think the longer term and midterm trend is up, but would it be a surprise to get a test at the 20-day moving average at the 3174 or even the 200-day moving average? No, I think that would be normal given the move that we've seen. Digest some of these gains. Still a lot going on with coronavirus, but still a lot in cash. So on these dips, don't be surprised if we don't go down a significant amount, especially in some of the names that are already beaten down. So it'll be very, very interesting to watch that. The put call ratio. This was our warning sign. We even tipped many people off to this. Hey, put call ratio in the 38% range is a warning. And we saw that in addition to RSI getting a little bit elevated in the Qs, and we said reduce risk. Now we just added recently again, and hopefully that'll eventually midterm pay off. So put call ratio, there you go. I know some people are tired of hearing that. The VIX, the fear index, would it surprise you? Again, it's in a downtrend. That's a good thing. Fear is reducing, but would it surprise you to get a pounce back to the 50-day moving average of the 29.48? No. So keeping an even-keeled attitude about this, knowing we have 65% plus to invest. So we feel we're in a good position. The ratio between value and growth, you're seeing in general, we've had some decent moves in value. The growth outperformance has been so significant. So I'm not sure how much longer it can continue with value. So hopefully growth builds some bases. That's my conclusion there. Percentage of stocks above the 200-day moving average. As you know, 5 main stocks are heavily weighted in the S&P 500. In short, 5 main stocks make up about 22% of the S&P 500. In short, breadth is really not that great when 50% or 56% are above the 50-day moving 200-day moving average. But that few companies are near all-time high. We're not even it's just kind of a concerning thing to pay attention to. Like, it's not a bad thing. I mean, take the gains in those names, but you just have to be very, very careful. Something to pay attention to, not a sell signal by any means, but it's just to show you a lot of the rally has come from, in this index, has come from 5 names. Now, don't get me wrong, momentum has been absolutely killer, and that's usually where we try to follow the trend. So the McClellan Summation Index, if you don't know what that is, it's basically a breadth indicator based on net advances. So you want to see this continue to increase, and oddly enough, despite the NASDAQ doing well early this week, we were seeing breadth wane, meaning we were not getting everything to follow suit. So it's kind of a warning signal. It doesn't mean it doesn't reverse, which it did. This, full disclosure, this is as of Thursday. So something to pay attention to, not anything to, freak out about, but definitely pay attention to it. Momentum names, we actually did add a little bit into this one. Rarely do we do ETFs, but if it needs to be fast enough, sometimes it happens. So we said on the 11th, hey, really, what's the risk reward here when you go up 148% and RSI at that time was very elevated? Just not great risk reward. So we sold a lot of the names that were in this ETF, and a 50-day, a test of the RSI, relative strength index of 50, would not be uncommon. In fact, it's probably a buy. So we're testing key areas here. Ooh, 2 more charts, I believe. Yeah, 2. The QQQ is something that we're really paying attention to. Is, the relationship. It doesn't always happen this way, but it's something to pay attention to. Usually you see 3, 4, or 5 candles before a reversal. Right now we're at 4. 1, 2, 3, 4. I would not be surprised if we test the 50-day, but everybody and their brother might be expecting that. And so that's why from a risk reward ratio or, probabilities, I'm going to add some here because I had very little invested and probably wait a little bit longer for a hopeful lower dip for my clients. So that's kind of the cues, how we're going about it there. One more chart on the cues. Short term. We posted this actually yesterday. Just another view, actually this morning, to say, hey, 20-day moving average is an important level. Pay attention to that. Let's see if basis can be established. This is what we're watching closely. We got, down to 40 basis points, but it's struggling to hold. We might need some more time. So I have some invested. Don't plan on really selling unless I have to. But really what we're watching too, another key thing we are watching is a potential cross between the 5-day moving average and the 10-day moving average, which is the blue line versus the gold line. That crosses for many people, that is a concern. Now the SPX, it's still not even an issue. IWM, which is the Russell 2000. Still not an issue. It probably will test it. Now I know the Qs actually has just barely crossed from a risk reward perspective. You can see right here and here it did in fact cross. Not an immediate sell. In fact, it's, in my opinion, and it's still in a bullish market. I'm going to add a little bit because we're way under allocated. So the risk of being under allocated means I have to get back in a little early. So hang in there. But overall, price action isn't dying yet. Okay. So let us know if you have questions. We've talked about breadth. Overall, we're headed into next week earnings season. So the shift has changed a little bit, and that's something we're noticing, paying attention to, where overnight the Chinese market has tanked, but the indexes in the US give you a chance to get in and potentially buy. You get a little bit of upside and struggle to hold from the leaders. That's not great. Again, I also want to see, how will the market respond? A lot of new traders out there. How will the market respond to 2 down days back to back in the Qs, the QQQ or the NASDAQ 100? I want to see how it holds up. It's been a long time. And so, watch price to follow sentiment. It's not, it doesn't take long for people to lose their mind, especially if you're a newer trader or just an investor in general. You've seen these moves. What do you expect? You see 2 down days, you might freak out and make a bad decision. So could we see some more downside potentially? But that's all we have for today. Let us know if you have any questions. We're here for you. Feel free to follow us on social media or subscribe online. That would be great. Thanks again. Have a great day. Bye.